Greetings to you all. It's your boy Chatmaster here. Welcome to Chatmaster FX, where we sanitize you with knowledge. And an investment in knowledge pays the best interest, both in the short term and in the long run. Guys, you need to invest in knowledge. You need to change your philosophy. You need to change your mindset as far as your analysis in the market is concerned. That's why at Chatmaster FX, we have a philosophy that you need to think like an institutional trader. I know that many of you, they are quarantined by these brokers. Your monies are always being quarantined by these brokers. You are always depositing money and you are always blowing accounts. So I've decided to come up with a vaccination program so that you can be able to also withdraw, whether it's monthly basis or a weekly basis or on daily basis. So I know that people have got different preferences. Some like natural remedies, some like clinical remedies. So we have all those various vaccination doses at Chartmaster FX. So we have the big 5 strategies. We have the soldiers of the jungle. We have the price approaches. We have the magic comrades. So you just need to choose which one you want, which one works for you, because I know that our bodies react to different drugs depending on the anatomy of your body. So you need to choose which one works for you. So guys, today we are going to look at the weakening base, which is abbreviated as WB. By the way, this is one of the soldiers of the jungle, and this is the strategy that we are going to look at. So let's get started. So here's the anatomy of the weakening base. As you can see, guys, that on this anatomy, the market is actually coming from a rally base rally. The market is coming from an RBR. So this is the first condition, or what we call the first phase, that you need to note as you will be trading the weakening base. So once you see such kind of a setup, then you can be able to spot how the market is reacting when it reaches this base. And there should be kind of a trend line here. There should be a diagonal trend line here where the price will be bouncing on. So as you can see that the price was able to make this high. And what happened is that when the price dropped and it failed to break this base, it came to this trend line and it failed to create a new higher high here. So you can see that this one failed to create a new higher high. This one failed to create a new higher high. This one as well failed to create a new higher high. So once you see this condition, then it's another thing that you need to see in order for you to validate this anatomy of the weakening base. So the other thing is that the market must come to this base multiple times, more than 2 times. As you can see, guys, this was the first time back, the second time back, the third time back, the fourth time back, the fifth time back. So this is where the concept comes from, that this base is actually weakening. The base is weakening, guys. Wherever the price is coming to this base, it is making this base weak. So this is what we do, guys. You realize that once you see that the market is coming from this phase, maybe of a rally base rally, sometimes it may be a drop, a base rally, It depends with what you prefer. So once you see that there's a phase here that has occurred, then this trend line, guys, another point is that there should be a MPL. There should be a decision point. There should be a valid decision point here. So you can see here we have an MPL. Those who don't understand what an MPL is, they should visit one of our journal articles. I think it was journal number 1. You need to go and study the MPL and the characteristic of the MPL so that you can be able to spot it on the market and be able to identify that this is the MPL that was being referred. So this also may be a Quasimodo level. It might be a Quasimodo level, or it might be a decision point. It might be a double maru. You have to check on the article on the decision points that matters in Forex. Once you check there, then you can be able to see which decision points that you need to look at. So I'm going to put the links in the description. So there should be a decision point here before we enter. So guys, this is another thing, guys. You can see here we have on the trend line we had 1, 2, 3, 4 touches before we placed a trade. So as you can see, guys, that once you see that there's an MPL here, the MPL, this, if we draw a demarcation line here, you can see that to our left side, all this is history. We have all this information on our chart. So once the price now is coming to this MPL, that's when you can be able to place a trade. So as the price is coming here, you can see that we have already 1, 2, 3, 4 touches. So there should be at least 2 touches before we enter. There should be at least 2 touches, guys. That's another condition. So guys, you need to follow the rules of this standard operating procedure. You need to follow the rules so that once you follow the rules, then you can be able to trade successfully. And the other thing that you need also to consider is that all these demands should be clear. They should not have been consumed most of the time. These demands should not be consumed, because once they are consumed, then it turns into a compression. And the idea behind the compression is that once the price compresses to a certain decision point, then the price should recover the compression gap until the origin of the compression. So you need to be careful about that. So that's why we put the MPL here, or a valid decision point that has got a higher probability of holding the price to go down. So once the price breaks here, then we know that the price is heading to the moon. And as the price drops here, we know that we will be profiting from the trade that we have made after realizing that there is a significant decision point here. So just a summary of the anatomy of the weakening base. The market should be coming, if it's a sell set up, the market should be coming from a rally base rally, or it should be coming from a drop base rally. Then once you realize that, then this base should be tested multiple times, at least 2. So the price came for the first visit, for the second visit. Once you have 2 visits, then it qualifies as a weakening base. Then you check on your trend line here, that this trend line, they are also maybe 1 or 2 touches. Not 1 or 2, there should be at least 2 touches before the price you can be able to make a decision. So we can see that before making a decision here, for the price to come back to this MPL, there were at least 1, 2, 3, 4. So these touches on the trend line, there should be at least 2 before we enter a trade. So guys, these are the conditions of the weakening base. So let's go to the terms and conditions of the weakening base. So as we have seen, guys, that phase 1, the price should be coming the price should come. The price should come from an RBR, DBR, RBD, or DBD. So as you have seen, when it's a sell setup, remember on this course we are only dealing with a sell setup so that we make the tutorial short. So the first thing is you need to identify the weakening based on the sell setup. Then once you master it, you can be able to flip the setup and look for some buying opportunities. Is that fine, guys? Yeah, so the price should come from an RBR or a DBR if it is a sell setup. Then if it is a buy setup, we should be having an RBD or a DBD. Then phase 2, in a sell setup, the price descends, as you have seen, guys, that the price descends, failing to create higher highs. As a result, weakening the base. There should be at least 2 touches weakening the base. There should be at least 2 touches on the diagonal line before price returns to a decision point. There should be a maximum pain level, MPL, a double maru, or a quasi-model level. So these guys, they can be able to hold the price. So once you see these guys on that weakening base, then it makes that weakening base tradable, because these guys are more likely to hold the price to go down. So enter at a valid decision point, and your stop loss, put stop loss above the decision point, whether it's an MPL, it's a DM, or it's a QML. And the target profit, look for past QMLs, kinks, FTRs, and flag limits. We have already covered these things. You should look for FTRs and flag limits in the journal article on the price action zones. I will also put those tutorials on the description. So let's go to the chart examples. So example number 1, here we are on crash 1000 index M30. So guys, the first thing that you need to do is to identify your base. Which is your base? And in this case, guys, we have a base here, we have a base here. Once you have a base here, we can see that the price came to this base, first visit, second visit, third visit, and it went up. And on its way back, we had another visit here, which is the 4th visit and the 5th visit. So this is a weakening base. The base is being weakened by these guys who are coming here. So once we see that this base is weakening, what we need to look for is the trend line. You can see that, do we have a valid trend line here? If we have a trend line, then it's fine. Then we look for the touches. We had a 1, almost 2, 3, 4, 5 touches here. So as I've alluded before, that we should have at least 2 touches before the price returns to a valid MPL or a valid decision point. So here we had an MPL here, we had an MPL here. So once we have an MPL here of type 1, so as the price now is coming from here going to the MPL, we know that this is history. So the price is coming here, this is the current affairs, this is the current affairs. And what is happening is the price is coming to this MPL, then you know that we have about 1, 2, 3, 4, 5 touches that we have. So we had a valid trend line, and also we have a valid decision point here. So the price, as it is coming to this MPL, then you can be able to place your trade here and just put your stop loss just above the decision point, which is just above the MPL here. So this is example number 1. So let's go to example number 2. On example number 2, guys, we are on crash 1000 index M30. Here on crash 1000 index M30, we can see, guys, that we have a best. The first thing is to identify a best. So yeah, we are fortunate, you are fortunate, guys, that in our examples we have a buy setup. There's a buy setup here. It's very fortunate to you guys, very fortunate. So you identify your best here. Once you identify your best, you see how price is approaching this best. So the price came here for the first visit. We see also for the second visit and almost the third visit here. So once you have at least 2 visits to this weakening best, then we know that the price is more likely to break it up. So once you identify that, you also need to identify a valid decision point. Here you can see that we have an MPL here. We have an MPL. Once you see that we have an MPL here, we can see that, guys, because look, if you draw a demarcation line here, then you see that this will be history and this is the current affairs. So what happens as the price returns to this MPL already on our trend line, guys, on our diagonal trend line, you can see that we have already 1, 2, 3 touches already. So that validates the setup. So once the price returns to this MPL, then you can be able to place your trade. So you buy here and you enjoy the way up. So this is example number 2. Let's go to example number 3. On example number 3, guys, we have a weakening base here. We have a weakening base and we had some visits to this weakening base. We had 1, 2, 3, 4, 5 visits to this base. So it validates the condition that there should be at least 2 visits to the weakening base. So this is a bonus, guys. This is a bonus. As you see some engulfment along the weakening of the base, it's actually a sign that more likely the price is going to drop down. So guys, here we can see that we have our MPL here. We have our MPL of type 3. And what happened here? What happened here? So as the price was coming to this MPL, on this one you may have missed this one, so you may have entered here. So as you enter here, guys, you can see that on the trend line, so the trend line must have been somewhere here. This must be our trend line. This must be our trend line. So there were 1, 2 touches before the price came here. So if you have that condition, then it validates that this is a significant weakening base. So once we have that condition, then we wait for the price to come back to the MPL. And once the price comes back to the MPL, you can be able to sell and you put your stop loss just above here. So this is the condition of the weakening base. So guys, let's go to example number 4. On example number 4 here on crash 1000 index, guys, that's the one that we're doing. On example number 5, on example number 5 here, guys, we are on boom 1000 index. On H1 we have our base here. Once we have our base here, what happened to price? The price actually came to visit this weakening base. It came 1, 2, 3, and before we place a trade, the price gave you an indication that we are about to go down. Why? Because this weakening base was engulfed. So that's an extra confirmation that more likely this price is going to go down. So you identify your MPL here, and as you identify your MPL, you wait for the price to return to the MPL zone. And as you can see that as the price returns to the MPL zone, we have already 1, 2, 3 touches, which validates this as a significant trend line. Then you put your stop loss just above here, then you can be able to see the behavior of price going down. So the conditions, all the conditions on the weakening base were met here. So guys, these are the examples, the chart examples, and you can be able to spot them on the live market, and you can be able to practice However, the weakening pace needs an extended understanding of price action zones, guys. Price action zones helps you and also to see, to know about what it is to have a clean base or a consumed base. All that knowledge helps you to filter some of the weakening bases and be able to trade weakening bases of higher probability. So these rules, that guys, that I have stated in this setup, they are the main important rules, and once you follow those rules, I can assure you that you can be able to trade this setup with great success. So guys, this was the standard operating procedure of the soldiers of the jungle. So guys, I just encourage you to like, share, and subscribe, and also hit the notification bell so that you don't miss any of the videos that are going to come. So those who are interested to learn more and to practice in a community setup, you are free to join our Telegram group so that you can be able to share your flashcards there, and there are people there that can be able to assist you so that you may improve your trading style. So guys, see you next time. It's your boy Chatmaster here, signing out.